Hello everyone and welcome back to another chapter. Today we are going to do the chapter registration. Not wasting any time, let's quickly start with the questions. Question 1, what it says, Mahadev Enterprises, a sole proprietorship firm, opened a shopping complex dealing in supply of ready-made garments at multiple locations, that is in Himachal Pradesh, Uttarakhand, Tripura in the month of June. Now see, the threshold limits for these states are different. So you need to consider that. Now, it has furnished the following details relating to supply made at such multiple locations for the month of June. So you are given the turnover limits for each of these states. Okay. So for Himachal Pradesh, it says intra-state supply of taxable goods. See, it is only goods 22 lakhs 50,000. Then for sorry, and in Tripura it has 7 lakhs. Then interested supply of exempted goods. So in Tripura also has exempted goods of 6 lakhs rupees and interested supply of non-taxable goods 21 lakhs in Uttarakhand and 40,000 in Tripura, and these amounts are excluding GST. Okay. Then with the help of above mentioned information, answer the following questions with reasons. Determine whether Mahadev Enterprise is liable to be registered under GST law. So you have to determine. So see, when you are supplying goods and services in multiple states, then the lowest limit will be the limit that you need to consider. And if you are registering in one state or from one location for any reason, then you have to be compulsorily registered for other locations also. And what is the threshold limit of taking registration in this case, assuming that it is not required to pay any tax on inward supplies under reverse charge? Then question number 2 says, explain with reasons whether your answer in one will change in following independent cases. If Mahadev Enterprises is dealing exclusively in taxable supply of goods only from Himachal Pradesh, if Mahadev Enterprises is dealing in taxable supply of goods and services only from Himachal Pradesh. Okay. So the first one says it is only taxable goods from Himachal Pradesh. Then the second case is that if it is taxable goods and services only from Himachal Pradesh. Let's see the question further. And the third case is that if Mahadev Enterprises is dealing in taxable supply of goods only from Himachal Pradesh and has also effected interstate supplies of taxable goods other than notified handicraft goods and notified handmade goods amounting to rupees 4 lakhs. So it has other interstate supplies also. So what will be the answer in that case? So let us see. So first we will be noting down the conditions and the threshold limits of a registration. So see. As per Section 22, read with notification number 10/2019, dated 7/3/2019, a supplier is liable to be registered in the state or union territory from where he makes a taxable supply of goods and or services if his aggregate turnover in a financial year exceeds the threshold limit. So you'll have to check the threshold limit, and you have to see that the supplier will be liable to be registered from a state or union territory from where there is a taxable supply of goods and services. Okay. If the aggregate turnover in a financial year exceeds the threshold limit. Now see, the threshold limit for a person making exclusive intrastate taxable supplies. The important word here is exclusive intrastate taxable supplies. Okay. So for a person making exclusive intrastate taxable supplies of goods, the limits are given as rupees 10 lakhs for the states of Mizoram, Tripura, Manipur and Nagaland. So if any of these states is involved, the limit is 10 lakhs if it is only intrastate taxable supplies of goods. Then rupees 20 lakhs for the states of Arunachal Pradesh, Meghalaya, Pondicherry, Sikkim, Telangana and Uttarakhand, and rupees 40 lakhs for the rest of India. Now, the threshold limit for a person making exclusive taxable supply of services or supply of goods and services. So if you are making taxable supply of goods and services, or you are making taxable supply of services, then the limits applicable are Rupees 10 lakh for the states of Mizoram, Tripura, Manipur and Nagaland. This is same irrespective of whether you are supplying only taxable goods or you are supplying taxable goods and services or you are supplying taxable services. And the second limit is rupees 20 lakh for every other state of India. So as per section 2(6) aggregate turnover, now what all will be included in your aggregate turnover? So your aggregate turnover will include all your taxable supplies, all your exempt supplies and your exports of goods and or services and all interstate supplies of persons having the same PAN number. So all these four things we will be adding to get to your aggregate turnover, and this will be computed on all India basis. So now in the light of above mentioned provisions, the aggregate turnover of Mahadev Enterprises is computed as under, this is the important part, excuse me. Okay. See, intrastate supply of taxable goods for Himachal Pradesh, it was 22 lakh 50,000. For Tripura, it is 7 lakhs. Intrastate supply of exempted goods in Tripura, we saw it was 6 lakhs. And intrastate supply of non-taxable goods, this for Uttarakhand is 21 lakhs and for Tripura it is 40 lakhs. So the aggregate turnover will be total of all of these things. So for Himachal Pradesh, it is 22 lakh 50,000. For Uttarakhand, it is 21 lakhs. For Tripura, it is 13 lakhs 40,000. Now see, as per section 247, exempt supply includes non-taxable supply. Thus, interested supply of non-taxable goods in Uttarakhand being a zero taxable supply is an exempt supply and is included in your aggregate turnover. Now, in the given case, Mahadev Enterprises is engaged in exclusive intrastate supply of goods from Himachal Pradesh, Tripura and Uttarakhand. However, since Mahadev Enterprises makes taxable supply of goods from one of the specified special category states, that is Tripura, so we will be seeing the limits of Tripura. It will not be eligible for higher threshold limit of 40 lakhs. Okay, so the applicable threshold limit would be rupees 10 lakhs. Now, in the view of above mentioned provisions, Mahadev Enterprise is liable to be registered under GST law with aggregate turnover amounting to rupees 56 lakhs 90,000 computed on all India basis of the states of Himachal Pradesh, Uttarakhand and Tripura, since the applicable threshold limit of registration in this case is rupees 10 lakhs. So since the applicable threshold limit of rupees 10 lakhs is being exceeded, it is liable to be registered even if it supplies only in the state of Himachal Pradesh. Now further, he is not liable to be registered in Uttarakhand since he is not making any taxable supplies from Uttarakhand. So we have seen that from Uttarakhand he is making only exempted supplies, and in case you are making only exempted supplies, you are not liable to be registered. Now, for the three cases that we were given, if Mahadev Enterprises is dealing in supply of goods only from Himachal Pradesh, the applicable threshold limit would be 40 lakhs. So if he is supplying only from Himachal Pradesh and Himachal Pradesh is not a special category state, so the applicable limit would be rupees 40 lakhs, and thus Mahadev Enterprises will not be liable for registration as its aggregate turnover for Himachal Pradesh was rupees 22 lakhs 50,000. Now, if Mahadev Enterprises is dealing in taxable supply of goods and services only from Himachal Pradesh, then the higher threshold limit of rupees 40 lakhs won't be applicable. Threshold limit of rupees 20 lakhs will be applicable, and hence Mahadev Enterprises will be liable for registration since its aggregate turnover is rupees 22 lakhs 50,000. Now, in case of interstate supplies of taxable goods other than notified handicraft goods or notified handmade products, Section 24 requires compulsory registration. So under Section 24, you are mandatorily required to be registered if you are providing interstate supplies of taxable goods other than your notified handicraft goods or your notified handmade products. Okay. So in that case, Mahadev Enterprises will be liable for registration. Now moving to question number 2. Element Private Limited, Coimbatore, Tamil Nadu, exclusively manufactures and sells product X which is exempt from GST via a notification issued under relevant legislation. So It is exclusively in manufacture and sale of product X which is exempt. The company sells product X only within Tamil Nadu and is not registered under GST. Further, all the inward supply of the company are taxable under forward charge. So, all the inward supplies are taxable under forward charge. So, there is no reverse charge tax liability. The turnover of the company in the previous year was rupees 45 lakhs. The company expects the sales to grow by 30% in the current year. The company purchased additional machinery for manufacturing X on 1st of July. The purchase price of capital goods was rupees 30 lakhs exclusive of GST at the rate of 18%. However, effective from 1st of November, exemption available on X was withdrawn by the central government and GST at the rate of 12% was imposed thereon. The turnover of the company for half year ended on 30th September was rupees 45 lakhs. Examine the above scenario and advise Element Private Limited whether it needs to be registered under GST. So what is happening? The product that the company was manufacturing and selling was exempted by GST, and from 1st of November this exemption is withdrawn by the government and now GST is applicable at the rate of 12%. So we are supposed to examine this scenario and advise whether registration is required or not. And the second question is, if the answer to the above question is in affirmative, that is if we are supposed to be registered, then advise Element Private Limited whether it can avail ITC on the additional machinery purchased exclusively for manufacturing X. So let us see. See. Section 22(1) read with notification 1019 dated 7/3/19 provides that every supplier who is exclusively engaged in intra-state supply of goods is liable to be registered under GST in the state or union territory from where he makes the taxable supply of goods only when the aggregate turnover in a financial year exceeds rupees 40 lakhs. So if you are only into supply of intrastate supply of goods, then the applicable threshold limit is rupees 40 lakhs. Okay. However, the above provisions are not applicable to few specified states, that is, the states of Arunachal Pradesh, Manipur, Meghalaya, Mizoram, Nagaland, Pondicherry, Sikkim, Telangana, Tripura, and Uttarakhand. Further, a person exclusively engaged in the business of supplying goods and or services that are not liable to tax or are wholly exempt from tax is not liable to registration in terms of section 23(1)(a). So if you are supplying wholly exempt goods, then you are not liable to be registered. Now, in the given case, the turnover of the company for the half year ended September is rupees 45 lakhs, which is more than the applicable limits of rupees 40 lakhs. Therefore, as per above mentioned provisions, the company should be liable to registration. However, since Element Private Limited supplied exempted goods till 31st of October, it was not required to be registered. So till 31st of October, since the company is exclusively supplying only the exempted goods, so it is not liable to be registered. But after 1st of November, it is voluntary registration. Okay. After 1st of November, it is mandatorily required to be registered, and till 1st of November, the voluntary option of registration was available. However, the position will change from 1st of November as the supply of goods becomes taxable from that day and the turnover of the company is above rupees 40 lakhs. It is important to note here that in terms of section 26, the aggregate turnover limit of rupees 40 lakhs includes exempt turnover also. This is an important point to be remembered, that the exempt turnover will also be included for calculating the aggregate turnover limits. Therefore, turnover of X prior to 1st of November, see, for seeing the aggregate turnover limit, we have to also consider the turnover prior to 1st of November. Okay. So that also includes for determining the limit of rupees 40 lakhs, even though the same was exempt from GST. So it is exempt from GST, so you are not supposed to pay the GST, but for considering the aggregate limit for getting registration, that turnover has to be included. Therefore, the company needs to register within 30 days from 1st of November, the date on which it becomes liable to registration in terms of section 25(1). Now, sorry, okay, for the second part, Section 18(1)(a) provides that a person who has applied for registration within 30 days from the date on which he becomes liable to registration and has been granted such registration shall be entitled to take credit of ITC in respect of inputs held in stock and inputs contained in semi-finished or finished goods held in stock on the day immediately preceding the date from which he becomes liable to pay tax under the provisions of this Act. Okay. So see, when you apply for registration, then within 30 days when you apply for registration, then you will be eligible to take claim ITC of the stocks, that is your inputs and your inputs services. Okay, but you will not be eligible to take any ITC for any capital goods. Thus, Element Private Limited cannot avail credit for additional machinery purchased exclusively for manufacturing acts, as input credit of only inputs is allowed when a person gets registered for the first time. So when you get registered for the first time, you get only the credit of your inputs and not of your capital goods. Okay. Now moving to question number 3. Okay. S&P Private Limited, Coimbatore, Tamil Nadu, exclusively manufactures and sells product Z, which is exempt from GST via notifications issued under relevant GST legislation. The company sells product Z only within Tamil Nadu and it is not registered under GST. Further, all inward supplies of the company are taxable under forward charge, so there is no reverse charge liabilities. The turnover of the company in the previous year was 55 lakhs, which is above the threshold limit of rupees 40 lakhs. Okay. Then the company expects the sales to grow by 20% in the current year. Owing to the growing demand of the product, the company decided to increase its production capacity and purchased additional machinery for manufacturing Z on 1st of July. The purchase price of capital goods was 20 lakhs excluding GST at the rate of 18%. However, effective from 1st of November, exemption available on Z was withdrawn by the central government and 12% GST is now leviable. The turnover of the company for the half year ended 30th September was rupees 50 lakhs. The board of directors wants to know whether they have to register under GST. It is a similar question. In case in the above question is if S&P Private Limited is already registered, see this is a different point. You can notice this. If it is already registered with respect to certain taxable supplies being made by it along with the manufacture of exempt product Z and other facts remaining same, can it take ITC? So here in this case the ITC will be allowed. If yes, then how much credit can be availed? So let's see the answer. Okay, see. So you have to write the conditions of threshold limit which are exactly same as we have written in the previous question. I will just read them out. Section 22(1) read with notification 10/2019 dated 7/3/19 inter alia provides that every supplier who is exclusively engaged in intra-state supply of goods is liable to be registered under GST in the state or union territory from where he makes the taxable supply of goods only when aggregate turnover in a financial year exceeds rupees 40 lakhs. However, the above provisions are not applicable to few specified states, that is the states of Arunachal Pradesh, Manipur, Meghalaya, Mizoram, Nagaland, Pondicherry, Sikkim, Telangana, Tripura and Uttarakhand. However, a person exclusively engaged in the business of supplying goods and or services that are not liable to tax or are wholly exempt from tax is not liable to registration in terms of section 23(1)(a). In the given case, the turnover of the company for the half year ended on 30th September is rupees 50 lakhs, which is more than the applicable threshold limit of rupees 40 lakhs. Therefore, as per section 22, the company will be liable to registration. However, Since S&P Private Limited supplied exempted goods till 31st of October, it was not required to be registered till that day, though voluntary registration was always available. However, the position will change from 1st of November as the supply of goods becomes taxable. So now till 1st of November, the goods were exempted, so it was not supposed to be liable for registration. But from 1st of November, the goods are becoming taxable, and so now registration will be required since the turnover of the company is exceeding rupees 40 lakhs. It is important to note here that in terms of section 2(6), this you have to remember, the aggregate turnover limit of 40 lakhs includes exempted turnover also. I previously also mentioned in the previous question that for considering the aggregate turnover limit, we will be including the exempt supplies turnover also. Therefore, turnover of Z will be considered for determining the threshold limit even though the same was exempt from GST, and the company needs to register within 30 days from 1st of November, that is the date on which it becomes liable to registration in terms of section 25(1). Further, the company cannot avail exemption of rupees 40 lakhs from 1st of November as the GST law does not provide any threshold exemption from payment of tax but only a threshold exemption for obtaining registration. So you will only get the threshold exemption for considering your registration and not for the payment of your taxes. Now, for part B, Rule 43(1)(a) disallows ITC on capital goods used for intended to be used exclusively for affecting exempt supplies. However, as per section 18(1)(d), where any exempt supply of goods and or services by a registered person becomes a taxable supply, such person gets entitled to take credit of ITC in respect of inputs held in stock and inputs contained in semi-finished goods or finished goods held in stock relatable to such exempt supplies and on capital goods exclusively used for exempt supply on the day immediately preceding the date from which supply becomes taxable. So from the date on which the supply becomes taxable, you are entitled to take the ITC of any of your inputs and any of capital goods exclusively used for the manufacture of that exempt supply. Okay. Rule 41A lays down that credit on capital goods can be claimed after reducing the tax paid on such capital goods by 5% per quarter of a year or part thereof from the date of the invoice. So, in the given case, S&P Private Limited could not claim credit on machinery till the time the supply of product Z for which said machinery was exempt. So, till it was exempt, it cannot claim the credit. But once the exemption is removed, that is from 1st of November, it can claim the credit. Okay. However, it can claim credit of said machinery once the supply of product Z becomes taxable. So that is from your 1st of November. Further, S&P Private Limited can take following amount of ITC on said machinery for its remaining useful life by making an electronic declaration in prescribed form specifying the details of the said machinery. Okay, so it has to declare this information and then it can take the credit of that machinery. So what all things are to be declared? Date of purchase of machinery 1st of July, date on which credit becomes eligible 31st of October. Number of quarters for which credit is to be taken is to including the part of quarter. So part of quarter is also to be included. Okay. So till your September ending, that is a part of quarter, but still it is to be included. September, November, December. Okay, so two quarters. The quarter till September, that is your first quarter, and the next quarter, that is your September, October, November, December, October, November, and December, that is your second quarter. Sorry, sorry. Okay, so your first quarter would be your October, November, December is your first quarter, and January, February, March is your second quarter. So for these 2 quarters, you will be eligible for taking the ITC. Now, even if the quarter is half, that is from 1st of November, still you will be entitled to take the entire quarter's credit. Okay. So, see GST paid on machinery. The machinery price was rupees 20 lakhs and 18% GST. 3 lakh 60,000 is the GST paid, and credit to be reduced is 3 lakh 60,000 into 5% into 2 quarters. So 36,000 amount you have to reduce from that, and remaining amount you can take the credit. So amount of credit that can be taken is 3,60,000 minus 36,000, that is 3,24,000. Now moving to question number 4. If you have any doubts or if you don't understand the calculation part, then you can ask me in the comments below. And also you will get the link for Telegram group in the description of this video. You can also come with your doubts and they will be solved there in the Telegram group. Okay. Now question number 4. Rishabh Enterprises, a sole proprietorship firm, started an air-conditioned restaurant in Virar, Maharashtra in the month of February, wherein customers are served cooked food as well as cold drinks, non-alcoholic beverages. In March, the firm opened a liquor shop in Raipur, Uttarakhand for trading of alcoholic liquor for human consumption. Now remember, trading of alcoholic liquor for human consumption is out of the purview of GST. Determine whether Rishabh Enterprises is liable to be registered under the GST with the help of following information. So you are given the turnover for the month of February and March. For serving of cooked food and cold drinks and non-alcoholic beverages, the turnover is 5,50,000 in February and 6,50,000 in March. Sale of alcoholic liquor for human consumption in Uttarakhand is rupees 5 lakhs in March, and supply of packaged food items from restaurant in Maharashtra is rupees 1,50,000 in February and 2 lakhs in March. Now you are required to provide reasons for treatment of various items given above. So let's see the answer. See, as per section 22, so you have to first write down all the conditions necessary for your registration. Okay, so it is rupees 10 lakhs for the state of Manipur, Mizoram, Tripura and Nagaland. In case of exclusive intrastate supply of goods, rupees 20 lakhs for the states of Arunachal Pradesh, Meghalaya, Pondicherry, Sikkim, Telangana and Uttarakhand, and rupees 40 lakhs for the rest of the India. If it is a case of supply of taxable supply of services or supply of both goods and services, then it remains rupees 10 lakhs for the state of Mizoram, Tripura, Manipur and Nagaland, it is same, and rupees 20 lakhs for the rest of India. And your aggregate turnover will include all your taxable supplies, all your exempt supplies, your exports of goods and services, and all interstate supplies of persons having the same PAN number. And all of these will be computed on all India basis. Further, the aggregate turnover will exclude all your tax portion, that is your central tax, state tax, union territory tax, integrated tax and cess. Moreover, the value of inward supplies on which tax is payable under reverse charge is not taken into account for calculation of aggregate turnover. So, your aggregate turnover will not include the values on which you are paying tax under reverse charge. Those values will be taken for the person, okay, in whose turnover that will come. In the given question, since Rishabh Enterprises is engaged in making taxable supplies of goods and services, see your goods and services, so my applicable limits would be rupees 10 lakhs and rupees 20 lakhs. From Maharashtra and non-taxable supplies from Uttarakhand, the threshold limit will be rupees 20 lakhs. Okay. Now, see why rupees 10 lakhs is not there, because from Uttarakhand it is making non-taxable services. Okay, so we will not be considering that one. In case from Uttarakhand taxable supplies was made, then your applicable limit would be rupees 10 lakhs. Now, in the light of above mentioned provisions, the aggregate turnover of Rishabh would be, see, for February it is rupees 5,50,000 for serving cooked food and non-alcoholic beverages, and cumulative turnover of your February and March is rupees 5,50,000 plus 6,50,000, which comes to rupees 12 lakhs now. And we have seen that for checking the threshold limit, we are including the taxable supplies, non-taxable supplies, exempt supplies, everything. Okay. Now see, exempt supply includes non-taxable supply. The supply of alcoholic liquor for human consumption in Uttarakhand, being a non-taxable supply, is an exempt supply and is therefore included while calculating the aggregate turnover limit. So we will be including this 5 lakhs rupees for considering the aggregate turnover limit. And your supply of packaged foods 1,50,000 and 2 lakhs, which is coming to 3,50,000. So your aggregate turnover in February was rupees 7 lakhs and in March it is rupees 20 lakhs 50,000. Now since our limit is rupees 20 lakh and which is being exceeded, so registration will be required. Now see, in the month of March, Rishabh Enterprises was not liable to be registered in the month of February. Why? Because in February the aggregate turnover is only rupees 7 lakhs and my limit is rupees 20 lakhs. Since its aggregate turnover did not exceed rupees 20 lakh in that month, however, since its aggregate turnover exceeds rupees 20 lakhs in the month of March, it should apply for registration within 30 days from the date on which it becomes liable to registration. Further, he is not liable to be registered in Uttarakhand since he is not making any taxable supply from Uttarakhand. It should obtain registration only in Maharashtra. Now, question number 5. Okay.
Okay, so moving on to question number 5, what it says, with the help of following information in case of MS Giant Enterprises, Jaipur, Rajasthan for the financial year, determine the aggregate turnover for the purpose of registration. So we have to find out the aggregate turnover that is to be taken into consideration for seeing whether registration is required or not under the CGST Act. So we are given sale of diesel on which weight is levied by Rajasthan 1 lakh. Now this is not in the supplies. This is out of purview of supply. Then second, we are given supply of goods after completion of job work of rupees 3 lakhs from the place of Giant Enterprises directly by principal by declaring place of MS Giant Enterprises as its additional place of business. So, okay, so this turnover will be in the turnover of the principal and not in the turnover of this job worker. Then you have export of goods to England, UK of rupees 5 lakh. Then we have supply of own additional place of business in Rajasthan 5 lakh. And then we have outward supply of services on which GST is to be paid on reverse charge 1 lakh. Okay, so these will also be in the turnover of the supplier. Okay, though we have to pay GST on reverse charge, the turnover will not be calculated in our turnover. Now, all the above amounts are excluding GST. You are required to provide reasons for the treatment. Okay, so we have to give them the reasons that why we are considering particular turnover as our turnover, and if we are not considering, then why we are not considering. So let's quickly go to the answer. Okay, so see, computation of aggregate turnover of MS Jain Enterprises for the financial year. Now, supply of diesel on which sales tax, that is weight, is levied under note 1 lakh rupees. See, exempt, though it is an exempt supply, we will be considering it for seeing the limit of our turnover. Okay. So, as per section 247, being exempt supply includes non-taxable supply. So, even if it is an exempt, we will include the non-taxable supplies as well. So diesel being a non-taxable supply is an exempt supply, and exempt supply is specifically includable in our aggregate turnover. So in our aggregate turnover, we are taking the exempt supplies, and your exempt supplies will include your non-taxable supply. Please note this point, it is very important. You are bound to make mistakes here. Then second one is supply of goods after the completion of job work from the place of Giant Enterprises directly by the principal. Why it is not to be considered? Why? Because that will be calculated in the turnover of principal. Now see, supply of goods after completion of job work by principal by declaring the place of business of job worker as its additional place of business shall be treated as supply of goods by principal. So since the principal has declared this place as the additional place of business, so these place and this supply will be that of your principal and not of the job worker. Then export supply to England, we include all the export supplies. Okay, export supplies are specifically includable in the aggregate turnover in terms of section 226. Then next we have supply to its own additional place of business, that is nil. Now the supply made without consideration to units within the same state is not a supply, and so it is not included in your aggregate turnover. And outward supply of services on which GST is to be paid by recipient under RCM. Okay, so since this is an outward supply, so we are the supplier, so this will be included in supplier's turnover, though GST will be paid by the recipient. Okay, it will form part of your aggregate turnover. So you have to remember this notification dated 7/3/2019, that a supplier is liable to be registered in the state or union territory from where he makes a taxable supply of goods and services if his aggregate turnover in a year exceeds the threshold limit, and the threshold limit is 10 lakhs rupees for the states of Mizoram, Tripura, Manipur and Nagaland. It is 20 lakh rupees for Arunachal Pradesh, Meghalaya, Pondicherry, Sikkim, Telangana and Uttarakhand, and rupees 40 lakhs for the rest of the India. And where the person is into exclusive taxable supply of services or supply of goods and services, then the limits will be rupees 10 lakh for the states of Mizoram, Tripura, Manipur, Nagaland, and rupees 20 lakhs for the rest of the India. So the applicable registration limit in this case will be 20 lakhs, as Rajasthan is not a special category state, and MS Jayant Enterprises engaged in supply of goods and services. So these 2 points you have to mention, whether it's a special category state or it falls in the normal category of states, and whether it is an exclusive supply of goods only or it is an exclusive supply of goods and services or of services, as the limits are different for both the cases. Now, although the aggregate turnover of MS Jayant Enterprises does not exceed 20 lakhs, it is compulsorily required to register in terms of Section 24, irrespective of the turnover limit. Why? See, here the threshold limit is not crossing. As we can see, the total turnover is only rupees 7 lakhs, okay, which is lesser than your 20 lakhs limit. Still, it is compulsory registered to compulsory liable to be registered. Why? Because it is making export to England. Okay, so that is the reason it is liable to be compulsorily liable to be registered under your Section 24, as it is making interstate supply of goods in the form of exports to England. I hope this is clear. Now let us take the last question of this chapter. Rajesh Dynamics, having its head office in Chennai, Tamil Nadu, carries on the following activities with respective turnovers in the financial year: supply of petrol 18 lakhs, inward supplies on which RCM is paid, RCM is applicable 9 lakh. Now remember, this is inward supply, so this will not be calculated in our turnover. If it was an outward supply, it would be calculated in our turnover. Please make a note of this point. Supply of transformer oil at Chennai, Tamil Nadu 2 lakh. Value of branch transfer from Chennai, Tamil Nadu to Bangalore without payment of consideration. Value of taxable supplies at Manipur branch 11 lakh 50,000. It argues that it does not have taxable turnover crossing threshold limit of 40 lakhs either at. So what it is saying, that it any of the states it is not crossing the limit of 40, so it is not liable to be registered. Further, it believes the determination of aggregate turnover is not required for the purpose of obtaining registration, but is required for determining the eligibility of composition levy. So determine the aggregate turnover of Rajesh Dynamics, and you are also required to review the technical veracity of the arguments of Rajesh Dynamics. So let's quickly come to the answer. Okay, see. Computation of aggregate turnover. Supply of petrol at Chennai, Tamil Nadu. See, it is a non-taxable supply, but as we saw that it will be a part of your exempt supply and it will be included in your aggregate turnover calculation. So 18 lakhs will be included. Then value of inward supplies on which tax is payable on reverse charges. Since it is an inward supply, it will not be included. If it would have been your outward supplies, it will be included. Supply of transformer oil at Chennai, Tamil Nadu. Okay, this is included. Then value of branch transfer also we will be including 1,50,000. Again Manipur branch transfer 11,50,000. So your aggregate turnover is 33 lakhs. Now see, Rajesh Dynamics is not liable to be registered in Chennai, Tamil Nadu if his aggregate turnover does not exceed rupees 40 lakhs. However, Rajesh Dynamics also makes taxable supplies from Manipur, and Manipur is a special category state, and if you are having any of the special category states, then your applicable limits will be as per that special category state. So here your aggregate turnover limit for consideration whether you have to get registered or not will be rupees 10 lakhs, and since it is crossing, we will be liable to registration. Now, Rajesh Dynamics argument that it is not liable to registration since threshold exemption of rupees 40 lakhs is not crossed either at Chennai, Tamil Nadu, Bangalore, Karnataka or Manipura is not correct, as firstly, the aggregate turnover to be considered is 10 lakhs and not 40 lakhs. Then it is compounded on all India basis and not state wise. So these 2 points you have to remember, that aggregate turnover we are not checking state wise, we are checking it on all India basis. We are including the exempt supplies, we are including the non-taxable supplies. Apart from this, Rajesh Dynamics is also wrong in believing that aggregate turnover is computed only for the purpose of determining eligibility limit for composition. It is also to be computed to see the eligibility limit for getting registration. Okay. Then, last but not least, Rajesh Dynamics is compulsorily required to register under Section 24, irrespective of the turnover limit, as it is liable to pay. See, whenever you are liable to pay taxes under reverse charge mechanism, then also you are compulsorily liable to be registered. So, irrespective of the turnover limits, Rajesh Dynamics is still supposed to be liable to be registered. Okay. So that completes this chapter, and if you have any doubts, if you want me to explain any of the points again, you are free to comment section, and also you can join the Telegram group. The link of the same you will find in the description, and I would be happy to receive your feedbacks. Study well and all the best for your results. Thank you, and we shall meet in the next session with another chapter. Till then, study well. Take care. Goodbye.